China. Right now, to me, China looks like it is the best risk-adjusted trade there is, or investment there is in the world right now. And I've loaded up 20% of the portfolio on eToro in only three stocks. So the first one, Tencent, 9.45%. It means I have the highest conviction in Tencent. Next up is Alibaba, 7%. And then after that, the third stock is BYD. Currently, it's at 3%, but I've just placed an order for 2% of the portfolio, and that will hit on Monday. So that will make another 5%. So those three stocks alone, it's more than 20% of the portfolio going long China. So just as a little analogy for you, like when you're cooking up a chook, right? You're being roasted. You might even marinated it beforehand. Maybe even marinated it overnight, and then you got it in the oven. You got it set, and then there's like 5 minutes left, and you just feel it. She's brewing up. She's ready to go, and you just cannot wait because you're so hungry. You cannot wait to open up that oven door and tuck into it. That's how it feels like for me with China right now. And for me, I'm coming from a background working at Nando's. I've cooked a lot of chickens in my life. And maybe something that you're not 100% aware of, you get a rational oven like one of these. These bad boys, they set you back like 50 grand, all right? Depending on the size, they're like 50 grand, 75,000 Australian dollars for these bad boys, but they're like a computerized oven, which you can program it perfectly. So it's not only an oven itself, but it steams the chicken, keeps the moisture in. It's absolutely beautiful. So it's like a little robot. It cooks it to perfection every single time. And the little trick that you could do at Nando's was because the what you're supposed to do is you're supposed to pre-cook it in this oven. That way, there's no chance of anything raw. So then you flame grill it at the end, so like, and you crisp it up for the customer when they order it. But what you can do is you put it back in that oven after the buzzer goes. You leave it in for another 5 minutes, and ooh, she is absolutely perfect. You don't get a better chicken than that. So that's what China reminds me of. The rationale oven, chuck her back in for a little 5 more minutes. Perfection. So obviously, it can be wrong with this. That's why the portfolio, it's 20% weighting, right? If I had a higher conviction, I would go in even larger. But based on what I see right now, 20%, that's what I'm comfortable with. I wouldn't want to go any larger than that. Any larger than that, that would actually start to scare the living daylights out of me, and I will start to lose my sleep. So 20%, we got to remember these are Chinese stocks. Negative news about China spreads really, really, really quickly. So that's why I'm not comfortable with going past, 25% in Chinese names. It's scary. But the reason why I feel comfortable with this size is because, a lot of the negative news out at the moment with the stock market's pulling back. Overall, it's fine. Like if we just take a quick look at the S&P 500 for a second, remember we have the road to financial freedom chart, and that helps us understand really, really quickly how cheap or expensive the market is. If you haven't seen it, I'll go post the link down to the video below. I think it honestly is a chart of beauty, very simple to understand, and I think it is honestly a masterpiece. But pretty much here it is. There's just a few lines to take a look at. The green dotted line is extremely cheap, once in a lifetime opportunity practically. Green line is extremely, extremely cheap. It barely ever comes down there. And then you got the white dotted line, which is fair, fair, fair price. And we pull back to that right now. So right now it's like a tiny bit above fair price. That's the overall market in general. And, we're getting close to expensive. We never ever got there, but we're getting closer, and that's the red line. And then extremely expensive is up at the red dotted line. So we're quite far away from that. So there's a lot of news at the moment saying that the market's done. It's gonna crash from here. It could, but I'm willing to buy at any price practically, unless it goes really, really high up to the red dotted line. Then I'd have to, reevaluate what my actions would be. But here, the chart says it's cheap, it's fair price. That's cheap to me. I'm willing to buy here, because you wouldn't even sell at the red line anyway, because the taxes you pay most likely outweigh the benefit of like that little drop, and you don't even know if it's actually going to drop. It can just keep on running. So overall, the market, the S&P 500, the American side looks good to me. I think that that is a good thing. Like obviously we're talking Chinese stocks, and here we're looking at America. It can you might be thinking like, what's the point of that? First point is it's just the relative strength out of China. China is showing that despite all of this news and all of that, and despite America, which is the main market pulling back, China is holding strong. There is relative strength. So you want to see an asset which is, if the whole market's pulling back, the whole world's pulling back, but your assets or these assets that you find are holding strong at the highs, that's a sign of relative strength. Um, so yeah, China is looking really strong. Then on another side, another perspective is actually the whole entire world is actually correlated these days. Yeah, you got different countries, you got America, you got China, you got Australia, you got all these different countries. But honestly, when it comes to the stock market, the whole entire world is actually correlated. Why? It's like it is diversified. You are diversified based on the demographics, based on, different countries and all of that. But in general, the whole entire world is correlated. Why? Because everything is online these days. The stock market is online. So if someone wants to panic sell in the US, they can also panic sell in China, right? If someone wants to, if someone's got greed and they want to buy in America, they can buy in China at the same time. It's a click of a button. The money moves extremely quick when it comes to the stock market. Now, that might not be like in other areas, like, real estate and standard physical businesses and that type of stuff. But when it comes to the stock market, it's the fastest moving asset class in the world. So that's why the whole thing is correlated. All right, let's take a look at the individual names, starting with Tencent. Mind you, this is again just slightly under 10% of the whole entire portfolio. Tencent, 10%, 9.45% to be exact. We've loaded up. We are overweight these names. We are overweight these names. So what I'm personally thinking is going overweight these three names. I've got maybe half of it, like 10% of it, I'll hold forever as investments. But I'm hoping that we get a little burst out of these names and we make like more than 20% over the next year or so. That's the goal, hopefully. It could be wrong, but that's what I currently see. I think it is possible and it is realistic. Let's see what happens. And then if we do get that little burst, then I'll cut that, take those profits, and then that will get us a free investment into some other name or like whatever opportunity presents itself then. Right. So that's what I'm currently thinking. Yeah, you can see it's holding at the highs here. It's had a very, very long consolidation. This consolidation's since COVID times, 2020, July 2020. So it's just been cooking up, marinating. And yeah, it feels like she's got 5 more minutes until that buzzer goes on the rationale oven. And she's fresh. She's a fresh chook, this one. So Tencent looking unbelievable. It does have a history. If we zoom out here, like it has a history when there wasn't so much negative news. Like after the COVID stuff, that's kind of where China lost its brand. Like the brand of China was getting strong. The sentiment of China was getting stronger and stronger and stronger. People were starting to trust it. People were starting to see they're becoming more of a free market, more capitalists, and all of that. And that was the opportunity because these names, they're actually very cheap, in my opinion, compared to the American counterparts. Um, so you can kind of front run that as well. Like, I believe they're undervalued because people are really, really scared. They're really scared to park their money in China still, even to this day. So I think before COVID, 2019, like don't say 2015 to 2019, I feel like that was like the peak of the brand of China. That's the peak of the trust, their reputation. I believe currently it's under that, right? It's definitely under that. COVID was like real low, real low. But now people are starting to forget this stuff. People they have short-term memory loss when it comes to investments and all of that. And I got a feeling if China can continue to execute quite well, then over the next 5 years, people will kind of even forget this stuff even happened. Talking about 2020, 2021, all of that. It sounds crazy, but I believe, after studying human psychology for a very long time, I believe that's how it works. So yeah, Tencent has a history of compounding really hard. Great company. As a side note, which I think is a fun fact about Tencent, is they have a VC arm, venture capitalist arm, where they invest in startups. I don't know their performance right now in this moment, but last time I heard that their VC arm was compounding at above 30% itself. So they're investing in all these different startups. They're investing in even US startups. I'm not sure if they've sold their positions. I haven't checked for quite a while. But they were known as actually one of the best VCs in the world, Tencent, and no one's really heard of them. All right. So yeah, big tech company out of China. Next up, let's talk Baba, Alibaba, the sleeping giant as well. It's about to wake up. We can call it the sleeping giant. We can call it the chicken in the rational oven. Call it whatever you want. It looks good. It looks really good. Again, we had this downtrend from 2020 when China lost its reputation. It then consolidated at the lows, and this is where the big plays were accumulating in multiple billions of dollars, in my opinion. You can see like they're the ones that set the bottom into this in this range here. This range is from like $125 down to the lows here at 57. So you can see where their accumulation is roughly. You just eyeball it. Where is the rough like where has the price spent most of the time? Roughly in the middle here at around $88. So they're already up quite a decent amount on their positions. And I think you're gonna shoot. You're gonna shoot to all-time high. Once you can finally break out to all-time high, we might have to have a few attempts at it. We might have to go like this. Sorry, the big arrow's in the way, but yeah, just imagine we're drawn behind this big arrow. We might need a couple attempts of breaking this all-time high, a couple of consolidations. We're probably not going to break on the first one, but once we do, as long as the reputation of China is strong in the moment, I believe we actually start the proper trend. Like Alibaba's never actually been in a trend. Like while it's been public, it's just done a whole heap of nothing. All right, that actually makes no sense. Baba has done a whole heap of nothing since practically 2015. So it's done nothing for what, a decade? That's wild. That's honestly wild. Remember the saying of like the stock market's an extremely hard place. It's you're versing some of the smartest people in the world. If the stock market is an extremely hard place, then it is very rare that you get an opportunity where the price isn't moving for a decade. Obviously, something must have been wrong during this time. Um, but this is a rare occurrence for a company that, in my opinion, is actually extremely fundamentally sound, very strong. So I can't wait. I hope over the next few years we start breaking these highs up here at what is it, 300, 315, and then we start an actual proper multi-year, multi-decade long bull run. All right, next up we've got BYD. BYD, I like this one. It's got a personality to it. It's an aggressive little fella. What he likes to do is he likes to sleep for a while. Sleep, 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 sleep. Break out to the highs. And then I think there's going to be a rocket ship explosion. And I wouldn't be surprised if it goes up by, 50%, 100% in like 6 months to a year, as long as the environment is good. The reason why I say that is if we zoom out, we had this really long consolidation. This is from 2009 to 2020, so 11-year consolidation. It did a whole heap of nothing, and then when it broke out, look at that. It just moved really quickly. So in a matter of months, it went from $80 to like 270. Great trade, great investment. I personally took some trades in here, personally took some investments in here, and still holding from this breakout, still have a core position on eToro holding from this breakout. And now as it broke out again, we're adding to that position a little bit even more. So there's nothing wrong with, I'm a big fan of buying at all-time highs, because you do get those quick moves and then you can take some profits. You use that free money to get a free investment. Obviously, you got to pay a little bit of taxes with it. But interestingly, BYD is becoming the market leader when it comes to electric vehicles, especially in China for sure. There's graphs I got to find. I probably should make a standalone video about it, but they're just pumping out. China is pumping out cars. It's really taking over Europe, taking over Japan, taking over the US. No one really is hanging in there except for Tesla. The bull case for me with Tesla is not even really about the cars. It's more about the automation, the robo taxis, creating the robot itself. It's all of that side. But there's big similarities in terms of the personality of the charts. Charts, they often have personalities. They move in very similar ways to other assets in similar asset classes if that they are roughly the same thing. So Tesla and BYD, they are the counterparts, right? They're kind of like the two companies that are going head to head right now. If we look at this, it's got a very similar personality where Tesla consolidates for a very long time and then just moves, right? This consolidation here is from like 2013 again to 2020, and then it just skyrocketed from 25 bucks practically to $400. And then we're consolidating right now with Tesla. I don't know how long it's going to consolidate. It could. I believe there is a chance where Tesla can actually consolidate at this level until literally 2030. If that does happen and then we break out to all-time high, after you've cooked up in that Russian oven, you've marinated that chicken for so long. After big cook-ups, you usually get a big explosion of flavors and you go really, really high, really, really fast. So, the longer the consolidation, if it is fundamentally sound, it means it's getting cheaper and cheaper and cheaper over time. Why? Because imagine if the price of an asset is holding at one level for a decade, what is actually happening with the fundamentals of the company? If the company is actually making a bigger and bigger profit every year, that means the internally, right? Fundamentally, the company is growing. The company is getting bigger. The company is becoming more profitable. The revenues are going up. The profits are growing up, going up. If all of that is happening, the internals going up, price is staying the same. Eventually, the market's going to find out about this and then think it's going to be undervalued. So I've got this chart here, the purple. It's a very easy line. I've just drawn it from the start of Tesla when they IPO'd, hugging along the bottom here, and it goes to the COVID lows in June 19. Um, well, was that from COVID? I don't know. I think this pullback here was COVID. Yeah, March 2020. Sorry. So before COVID, April 2019. I just connecting those ones. And then if it ever gets there again, I'm going to say, hey, this is really, really cheap. And whenever you get close to these lines, like imagine you're consolidating for this whole time, turns out to be a decade long consolidation, and then you break out near the line where it's really cheap. So it's cheap and you've broken out to all-time high. It's really safe. Like I feel comfortable loading up 10% in those scenarios. But right now, it's a bit hard to tell with Tesla. It's a little bit hard to tell. Do we get a consolidation for that long? I don't know. Overall, is it cheap? I think it is decently cheap. Overall, is the market feeling greedy right now or fearful? I think they're very fearful. I think the stat right now is Elon is down, I think $150 billion. I'm not sure if that's just from Tesla or across his whole entire net worth, but just since the highs here, I believe he's down around 150 billion and Tesla is down 55%. So gun to my head, are we closer to the top or closer to the bottom? I would say we're closer to the bottom. We do have this little uptrending line here. There's not the biggest significance that, we might come down and touch it. I'm not sure. Remember the lines are only lines. There's nothing special about them, but they're just, we can use them as guides. If it does come down here, I'm like, and if we come down here quick, then that means Tesla's going to be pulling down like what 63%. I'm pretty sure that's the bottom. Like whenever you crash that quickly, you can just feel the greed. Everybody who has sold is probably sold. They're probably out, and they probably sold for a loss. When that happens, big boys, they like to come in. They like to buy the blood on the streets. And then they set the bottoms with their money because stocks, their supply versus demand, a lot of buys, they're going to start moving the price higher and it becomes a self-fulfilling prophecy. But yeah, that's a little bit about Tesla. And the similarities with BYD. But I think I'm going to wrap up the video here. We could go all day long. But yeah, I think overall, I think that there's a lot of people are scared with the market right now. We just got to go back to the chart of financial freedom. That puts everything back into perspective. We're coming really, really close to fair value, and most of the time, the stock market is not near fair value. Stock market is a hard place, so it makes sense that it's always going to be above the white dotted line and between the red line. And if we just eyeball it here, that's what happens. 2/3 of the time, at least, we're above fair value, and that makes sense. Why would the world present us with cheap buying opportunities frequently? The world's not that nice. It's not that kind. To be successful, it's a world of competition, right? You got to be prepared when these moments come. The COVID crash, the correction of 2022, down here, October 11 and 2009, 2008 financial crisis. That's when you got to be opportunistic. Those opportunities, they barely come. All right. So most of the time, it's above the white dollar line. That's fine. I'm happy to buy above the white dollar line because even if you do your dollar cost average into the S&P, you make 10%. It's not too bad. You hold, you never sell, you don't pay any tax. It's 10% after taxes because you don't pay any. All right, that's everything for this video. Rambled on a little bit too long. If you've got any questions, you know what to do. Please leave a like if you're still here and a comment. I would really appreciate that, and I'll see you in the next video. That's it. That's it.